Grinnell Capital is a boutique asset management firm based in Park City, Utah.
Good morning. My name is Frank Grinnell. I've been investing in the stock market for over 20 years. It serves as my day job, and most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we share high-conviction ideas with subscribers, and we actively manage stock and ETF models for financial professionals and their clients, as well as individual investors. For more information, check out our website. Before we get to today's podcast, be sure to hit subscribe. And now, today's Street Views. Hey, good morning. Welcome to Street Views. Hope you're having a good week. It's been interesting. It's been exciting. Let's get into some stuff. Futures recovering a little bit before jobs data, which comes out, I think, right now. I'm doing this early because I'm on dad duty. We've got the missus off with my daughter on a little girlfriend ski weekend, which is great. They're off in Sun Valley. Anyway, we've got energy still. I want to talk about energy for a quick second. Quit hot second. Still acts heavy, right? So I got the USO up here on the chart. You can see that. I mean, look at these things. These things are kind of in no man's land. They're below the 200-day. They're kind of flirting with maybe breaking down below the 50. Maybe you can argue you've got higher lows being put in on WTI. If we go over to Nat Gas, yeah, you could say the same argument. I mean, you actually have somewhat of a trend line here. You can sort of hallucinate that this thing's trying to stick to. If this thing breaks down materially, you're going to violate that on UNG. You got all the backdrop in the world. I know very smart people constructive on the space. The supply problems that we have, super cold winter, probably getting colder, China reopening potentially, underinvestment, the big tax windfall crap they're doing over in Europe, lowering CapEx for a lot of those producers. All these things are bullish crude, yet it doesn't seem to matter for crude. That's a concern. So I've got plenty of exposure, not adding to it. I'm tempted to buy more on the services side. As you know, services and inexpensive E&P are my preferred vectors right now, but staying still. All right, so let's talk about OPEC too. They got a meeting coming up on Sunday. So Saudi was going to defend 90 Brent. That's not happening. Maybe they do cut more. We will have to see. So even though I think the pain trade is still higher, I think there's two things that one should do right now, if in fact one has made some pretty good money in returns, as we have really recently. So two things. One, take some profits. Take some chips off the table. I think it's smart. S&P is up against huge resistance right here. Like, for example, the GDXJ, we talked about the junior gold miners, just an awesome trade. We were up over 20% on this thing. It looks great on the chart, up over the 200-day. Looks like awesome. We want to buy more. Yeah, I don't know. I might take some off, see how it acts. Gold itself, the GLD, looking good here right at the 200-day. So this looks ripe for a pullback and some consolidation before an earnest move higher. We look at the dollar measured by the UUP. This thing's right up against 200. Look, see, now it's gone up. So something happened with the jobs data. It's probably not great for the market. Let's see. SPY's looking, looking down huge. No, are they? Yeah, they're looking down, not huge. They're looking down a little bit. No, they're looking down pretty good, almost 2%. So something happened. I'll get to that. So yeah, like I said, good day for profit taking. The other thing, the VIX, if we look at where the VIX is, we have a VIX sub 20 yesterday, 19 and change. If you go back and look at the other times it's been down there, it's made all the sense in the world to buy some protections, whether you're going to write covered calls, buy index puts, long the VIX. I think this makes a ton of sense right here. If you are on the semi-trade and want to look at Marvell, take a look at Marvell. They reported and all the usual concerns, lowered guidance, high inventories, stock down 7 after hours, down 4 this morning, 4 and change, 4%. See how it acts. I don't know. I'm skeptical of the trade still. As you know, we are not there. I think it's too early. And that's it. Have an awesome day. Protection. The name of today is protection. Have a good weekend.
And now for some important disclaimers. This podcast is intended for financial professionals only. Grinnell Capital LLC is a state-registered investment advisor located in Utah. Services offered by Grinnell Capital can only be offered in the states of Utah, Idaho, California, and Texas, where Grinnell Capital is registered or where otherwise legally permitted. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisor.info.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be consumed, construed at the provision of personalized advice, and is subject to change without notice. This material should not be considered a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital LLC as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility. Therefore, this podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve long relative and risk-adjusted returns, primarily by investing and trading securities issued by companies that focus on the global information technology, consumer healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth potential and an abundance of both new and maturing product cycles, a field of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the Ignition model. The Ignition model is an all-exchange traded fund, ETF strategy, with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The Ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some risk aversion in the event of significant market stress through investments and ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital LLC has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, www.grinnellcapital.com.